Hi, welcome to this video today, which is on the 16th of January. We're on Saturday. We're just going to give our updated outlook and analysis for the euro today. We'll look at the euro against the USD. We're also going to look at the euro against the JPY and the USD against three euro correlated currencies. So USD SEK, USD CZK, and USD PLN. We'll go over to the charts in a moment. They all look excellent risk-reward trade setups. Now, in terms of last week's video, we were saying we felt the odds were high of a breakdown in the euro, and the euro has shown weakness over the euro correlated currencies, but I think this could be just the start. I think there's a major trend reversal about to be confirmed in the euro and the euro correlated currencies. Now, we'll be looking at the key technical levels when we get to the charts, obviously, but in terms of big trends, the big trends are driven by the fundamentals. Now, the big fundamental, which I think is going to firm the USD and of course the JPY, is bond yields. Bond yields just so important in big trends, heavily bearish for the euro and euro correlated currencies. What I'm going to do now is go over to the charts. So just before we do so, just need to say it is my view as of right now. It can of course change in line with the market actions and conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 FX pairs, all you need to do is click on the link beneath this video and you'll get live access to our member center. You can also check out our recommended regulated ECN broker. Follow us on Facebook and join our Facebook group of traders as well. Now, before we go and look at the individual Forex setups, let's just have a quick look at some charts in relation to bonds and just see how important they could be going forward. Right, so just very quickly, before we look at the FX pairs, have a look at bond markets. I'm looking at a US bond market, first of all, the 10-year note. Why is it important? Well, it tells you the cost of US debt. So over here, it's 1.11. If you're a bond investor, that is your yield, okay, on your investment. Now, that is pretty good against other bond markets, particularly Eurozone bonds. Now, you'll see in the media that USD is going down because the Fed are stimulating, they're printing money, they're forcing interest rates down. They're not going to raise them anytime soon. They do a good job, but they bring interest rates down here in the bond market. Then when the pandemic comes in, they really force them down, try and get back up there. Then we travel sideways below the psychological 1 level, get down to 0.5, and then up we come. And there's the breakout last week. That, in our view, was the main driver of USD strength. We're at 1.11. I think we're going to 150. Okay, so long as the bond market stays firm, the USD, I think, will go up. Bond markets are huge. So, as that yield goes up, more investors invest in US bonds. They have to buy US dollars, of course, and that helps firm the dollar. What's going on in terms of Eurozone yields? We know the yield on the US bond. I showed this chart last week. I'm going to show it again for anyone who didn't see last week's video. And it should be coming up shortly. It's this one here. It's from Morgan Stanley. This really warned of the Euro USD topping out. What you see is the German 10-year, the equivalent of the T-note in Eurozone. That's the brown line. Blue line is Euro USD. This chart goes back to 2011. And what you'll notice when the brown line, the yield on the bonds goes down, tends to drag the euro with it. Okay, the euro gets a bit away to the upside there, but quickly rolls over, goes below bond yields. Try and get above them there. Well, we do get above them there, then we come straight down with yields. Now, if you look at the gap between there and there, it's by far the biggest on this chart. And we were saying last week that was unsustainable. Okay, look at the yield on the German bond, just 0.5 negative. So a negative rate. Okay, so yeah, the divergence between US and European bonds has started the rally in the USD against the euro and euro correlated currencies, and it will continue in our view. Right, let's go and take a look at our trade setups. First one we're going to do is going to be Euro USD. Right, Euro USD daily chart, obviously, break up here. Nice move to the upside, and now we're seeing some weakness. I think there's far more weakness to come. I'll do the key technical levels of support and resistance as I see them in a moment. Just very quickly go through these points. Last week we were saying the majority of bank and broker research at the start of the year was saying the euro would go to 125, possibly even 127. Yeah, we checked 20 reports. We found only one mildly bullish of the USD, all the rest bullish of the euro. So, the market view generally for the euro to go higher. Of course, yeah, this target 125, 127, it's for the first quarter. We could get there, but yeah, I just think the odds are really high for more weakness. Now, what did the majority base this bullish view of the euro on? Well, we've already looked at money printing. Market saying, well, yeah, Fed are printing money, interest rates in the US are low. That's bearish for the USD. We've really seen this point as not valid this moment in time, with yields rising in the bond market. Okay, also the majority viewing the eurozone economy to outperform the US economy going forward. But if we look at the data, all leading economic indicators favour the US economy over eurozone. Lockdowns are less severe in the US than in Europe. I.e., if you look at Germany last week, Angela Merkel was saying, it's the powerhouse economy of the zone, might have to stay locked down until March. And other big economies in Eurozone are locked down. That's going to weigh on economic activity. Now, last week, fiscal stimulus package in the US from the Democrats and Joe Biden, market was saying, that's really bearish for the USD. And it was announced, you got, I think it was 2 trillion in stimulus, but that is why the bond market is actually going up. Okay, so market was looking for that fiscal stimulus package to send the euro up on the USD. Obviously, it didn't go up. Okay. Also, last week we had Fed Chairman Powell really dovish about the central bank's view going forward. He was saying interest rates won't rise anytime soon. They are rising in the bond market. So you had two kind of high impact events. The market looking for the euro to push higher, the euro falls. And that's always good news, if you're looking for a turn. Okay, if bullish news can't push the euro higher, that's a warning it's going down. It has gone down a bit, and I think it could go down a lot further. Point number 4, important, largest FX fund short position overall in the USD since 2011. If you go back and look at 2011, what happened? The US dollar went on a 30% rally overall. There's too many speculators short. I'm not saying it's going to go up 30%, but you're due for the dollar to go up. And it's got more upside in case of this pair. So obviously the euro's got more downside. And in terms of technicals, pretty simple. Kind of come up here, and we touch this 20-day moving average, get through the 118 level. Then we go on basically a 500 pip plus rally with no touch of the 20-day moving average. And we were saying we felt that 20-day moving average, if it gave way, could trigger euro weakness. Do get through the 20-day, come back up on the blue, can't get through in that red, indecision candle, bearish candle. Okay, so we felt the 122 level, big round number, very important, and I think that is the major resistance now to rallies. Okay, now in terms of trajectory, I'll draw it in here. There you go. Okay, so basically lower highs, and that's a nice bearish candle on Friday. Now, in terms of downside potential, actually the first level of resistance, let me just draw it in, is going to be there. Okay, so the bottom of those 3 bodies, top of that body, first level resistance, second level, so you can sell back to that level and have your stop behind the 20-day moving average. Never put your stop behind first level resistance. Give it a little bit of room to breathe, and this pair has got plenty of downside. Back to 180. Okay, and from our view of the big fundamentals going forward, I'm going to say we should get down to 116. Okay, so you can see plenty of potential downside Of course, if our view is right, it's nearly 500 pips, isn't it? Risk to reward on the trade with stop behind second level resistance. You've got about 5 to 1 to second target. I mean 3 to 1 to first target if my eyes are seeing it correctly. But yeah, plenty of downside potential. Right, now what we're going to do is we're going to look at Euro JPY before we do quickly the euro correlated currencies. Right, on euro JPY, just going to use charts on our member center for the last few pairs. Now, in terms of euro, obviously we're really bearish on the USD. We're also bullish, bearish against the JPY as well, and we've seen some weakness. I think there's plenty more weakness to come. Now, in terms of bonds, Japanese, biggest overseas investors by far, they hold a huge amount of Eurozone bonds and they're pulling their money out, and that is obviously weakening the euro. Now, in terms of the technicals, we based out at 122 here, up, back a bit to the 20-day moving average, up, basically holding above the 20-day moving average. Then we top out, new daily high, come down, snap the 20, and then we take out this 126 level, and where these bodies are basically positioned. Okay, so it's obviously a big level of support. It's given way. We settled near the lows. Any rallies back to this level here, 126, are selling opportunities. Basically our stop, you can see it's behind the 20-day moving average, the double trend line here. Looking for more weakness. So yeah, you can sell rallies in this pair. If you're as bearish as us, you could come in. Yeah, if we opened at the same price we closed out on Friday, you still got good risk to reward. Stopped there. You got about 4 to 1 down to 122 in terms of risk to reward. Obviously, our target has got to get hit, but I think going down to 124 quickly, then following on to 122. Longer term, we could go even lower than that. So another good risk to reward pair in our view. Now let's go and take a look at USD quickly against the euro correlated. On the first of the USD pairs against euro correlated currencies, this one is USD SEK. Now, if you want the strongest European currency this year, it's the Swedish krona against the USD. Even in the last few months, it's really had a good move. For the SEK's pushed the USD down. You can see here we break the 20-day moving average. It's back in November. We just can't get through it. Last week we were saying we felt the 20-day moving average would give way. It did. Did come back briefly through it. Then you get decisive blue up. A little bit of retracement on the red. Can't get to the 20. Then this blue breaks out above this level of resistance. So you've got very firm support back at the 20 now. First level support is here. See my targets. You've got well over 3 to 1 to first target, 5 to 1 to second target. Yep, USD's really suffered against the SEK, and the SEK has been very strong on the euro as well. It's just so overbought. Looking for a really good rally to the upside, so we shall see. Next one, USD CZK. They're kind of all similar trade setups. You can see here we top out through the 20, can't get back through it. That's from November again. Look at it. One poke there, another poke there, can't get through. Down. Again, we thought it would break above the 20-day moving average. We do. Red comes back to test. Blue, small one, bigger blue, starting to move to the upside. We should get back up to chart highs in our view. At the moment, I've got my stop back behind this second level of support. But if we get some nice blues, I'll bring it up behind the 20-day moving average. So another really good looking risk to reward trade. Last one, USD PLN. Again, big fall through the 20. Slightly different because we get through it there, can't hold. Then we hold, we get tail pokes through, but the bodies hold. This body comes through, this body goes back to the 20, go up, and now we're working our way up and away from the 20-day moving average. Stop back here, but just like with USD CZK, if we get some strength, some nice blues, I'll bring my stop up. Okay, now why look at 3 proxies? Why not just pick out the best? I think I said it last week. You don't know which one is going to move the best, or we don't. Okay, very often you pick one pair, okay, and then it's another pair that really gets, yeah, the big move, the upside. Your one is the laggard. So we're just doing all three, treating it as one trade. They're going nicely so far. I'm hoping that is going to continue. Right, that is the video for today. Thank you for watching it. Take care. Have a good day.